at the same time, the Fed is saying the economy is strong and everything's good as long as the banks are in good shape, but the banks aren't in good shape, as evidenced by this report.
The land of Arcadia.
Hello there, my friends, and welcome to Arcadia. Chris Marcus here with you on Thursday, July 5th. Hope you had a great holiday, and let's dig into some of the news. A lot of it Federal Reserve focused because yesterday the Fed did release meetings from the released minutes from the June meeting. And it was interesting, some of the takeaways here, because there was an article on CNBC today. The Fed, letting inflation run too hot could lead to a significant economic downturn. Well, of course it could. That's the whole reason why it's never really that advisable to print money in the first place. Now here the Fed is at least asserting that inflation might be too hot, which would lead to potentially more interest rate increases, a more aggressive pace perhaps than previously forecast. Of course, the real problem is that letting inflation, it's a little bit too late to say that now letting inflation run could lead to a significant downturn. Over the past 10 years, the Fed's inflationary policy has inflated bubbles in the stock, bond, and real estate market that now are going to collapse one way or another. But certainly it was interesting reading this article about the Fed here because let's take this quote. Federal Reserve officials worry that letting the U.S. economy run too strong could cause major problems down the road if left unchecked, according to recent minutes. Some members expressed concern that a prolonged period in which the economy operated beyond potential could give rise to heightened inflationary pressures or financial imbalances that could lead to a significant downturn. Again, I always love the way Peter Schiff used to phrase this, where he would mention the Fed talking about the economy overheating or underheating like it's a car engine and we're just going to flip a switch and go exactly. And these guys couldn't even see the housing bubble coming. So the idea that they're have the ability to tweak inflation to the 10th of a percent, well, to me, I certainly don't believe that that's anywhere remotely near accurate. Yet in the end, here it is, the Fed is talking about, through this article, that certainly they plan to continue hiking rates going forward. What was interesting, though, there's an article from the Wall Street Journal on Monday that mentioned that the Fed dinged Deutsche Bank. There were also some stress test concerns, I believe, with Morgan Stanley and Goldman and a few others. And at the same time, the Fed is saying the economy is strong and everything's good as long as the banks are in good shape, but the banks aren't in good shape, as evidenced by this report. Which is why there's some degree to, yes, what the Fed actually does and says does have an impact, yet what doesn't change is that they double talk the majority of what they say, and they are still back in the corner where either they print money and completely blow out the currencies or raise interest rates, which in some ways would be the responsible thing to do if we weren't so far past the point of no return. Yet, as interest rates go up, we've started to see Deutsche Bank running into trouble. A lot of the emerging markets that have a lot of dollar-denominated debt are running into trouble because now their interest costs are going up. So why, again, I've always felt comfortable first with gold and silver and then later with the cryptocurrencies that I believe will maintain value and have an actual business function, is that this financial system as we know it is past the point of no return. And now it's just kind of waiting to see when this behemoth finally falls over and something can be constructed in its place, which in many ways I do believe is happening behind the scenes. Man, I sure would love to know what is going on behind the scenes, because I get the feeling there's a lot that isn't quite shared with the public. Now, along the lines of the Fed continuing to raise rates, I'm assuming that means they would continue with their so-called normalization of the balance sheet. keep in mind that when they talk about normalization, Jerome Powell is on record as saying that means taking it back down to 2.5 or 3 trillion over the next 4 years, which, given it was 800 billion before the crisis and the QE, doesn't quite seem normal. Yet what's interesting is that here, let's pull up the 6-month chart on the 10-year note. So again, you see back in mid-May, got as high as 3.11%. Then Italy ran into some trouble. People flocked to treasuries. Rates started going back up until today, where it's at 2.83. Makes you kind of wonder if China's pulling away, if Russia's pulling away, if the Fed's pulling away, who is actually buying all of these bonds? I suppose with crises abroad, could there be some people who are still turning to the U.S. Treasury? That could be, although what I've been hearing about for years and am leaning more towards thinking is more likely an explanation is what is known as the Exchange Stabilization Fund. And there's actually, let's see if we can get the video description to pop up there. What I've been afraid to blog about, the Exchange Stabilization Fund and its history. It's a 5-part series from the website marketskeptics.com, which you can see there's a link to down there, or you can just type in the title into YouTube. Again, Rob Kirby talks a lot about the Exchange Stabilization Fund. Keep in mind, we do have a report about the government losing $21 trillion with, to my knowledge, their only response so far still being that they've just taken the evidence off their website without comment. So I do believe that there is something to, and certainly what these videos provide plenty of evidence of pointing out that there are some dark money pools that are distorting things, which is what makes so much of the analysis at this point in the financial markets often challenging, because you're not looking at your typical supply and demand and just looking at the numbers and what makes sense. The numbers that come about the jobs report, the CPI. In fact, about, maybe 8 or 10 years ago, there was one point where Obama actually suggested changing the CPI formula as a means of deficit reduction, basically saying, let's lie about the rate of inflation so we can pay out less, which, whether he realized it or not, was inadvertently acknowledging the numbers are fraudulent. So, you know, again, there's what is presented to the public, and what I try to share here is, with my experience, you know, showing what I believe is actually going on and what that will lead to, most importantly. And with that said, we'll take a quick price check on two of my favorite markets here, perhaps, if you're watching this, similar. As you can see, the cryptos still hammered pretty good. They rallied a little bit over the past few days, although Bitcoin now back under $6,000. My computer wants me to enable cookies. But yeah, crypto's still pretty low. A quick look at the price of silver, also around 16 bucks. So certainly the move has not happened yet, although it's just fascinating to see how the markets don't respond given all of these things that are happening beneath the surface, which certainly can test your patience. Although to me, I like to look for the positive in the situation. At least you can buy gold and silver and cryptos at levels that I think are incredibly cheap based on what I would imagine they would be after some of these things like the unending US debt, the trade wars, the money printing, all of these things are resolved. Again, I don't see that as a matter of if, but rather when. And certainly expecting an exciting second half of 2018, with one final note being, you know, I'm sure there are people who are tired of hearing gold and silver manipulated. They're going to go up one day. And again, I can understand that. Yet, while there's not much retail gold demand in the U.S., again, on a retail level. Something I wrote about earlier this week for Miles Franklin, a place where you can buy gold and silver if you are so inclined, is why are so many countries buying gold? Because while the average retail investor in the U.S. might not be doing so, I mean, we've seen Russia buying gold, China go on a massive gold buying spree, Turkey repatriating their gold, Hungary repatriating their gold, and even mainstream U.S. investors like Jeffrey Gundlach and Ray Dalio also buying gold. So maybe there is a reason. And certainly when you think about, we're not talking about some small shops here, but actual foreign central banks that are highly involved, have access to information that the public does not. My guess is that they're well aware of what has been going on in Wall Street and the US media and the debt situation, and that's the exact reason they're buying gold, which is the same reason that I've bought gold and silver and things like Litecoin and Veritasium, and plan on holding them because certainly the price can go down. I'm surprised some of the prices have gone down as much as they have. Yet to me, until someone can explain how the Fed is going to get itself backed out of that corner, or what's going to happen to the U.S. debt, seems like that's just market noise, and I will sit here and wait patiently. Let me know if you have any questions on that. Maybe you're seeing the same or differently, but hit the thumbs up button. And with that said, going to wrap up for this week. Thanks as always for watching, and I will see you again next week.